Okay, that's the view coming in on the markets. Time to wrap up then the trading session on Thursday. Well, looks like Women's Day has done a whole lot of good to the markets. We snapped that 6-day losing streak. It's pretty much an even Steven when it comes to the market breadth, but minorly in favor of the gaining side. So here's where we shut shop on the index, 10,232 thereabouts. That's up a good 78 points. It's higher by almost 1% on the Sensex, or 300 points at 33,335. The broader markets have tried to follow suit, tried to play catch up, and not too bad given that it's been a very smart recovery from the morning session to end higher by 0.5% on the mid and the small cap indices. So we touched a high today of 10,270 and we're shutting shop just about 40 points sub that level. PSU banks today have contributed on the upside, finance as well as Nifty Bank in the green. You've got autos, infrastructure holding out, while pharmaceuticals, FMCG, metals, those are some of the sectors that take a back seat. Let's run you through some of the smart gainers then, and today it's SBI bank index, which remember has been pretty much hammered out of shape all of February, so some as well as from the highs that we witnessed in Jan 29th, that index has shaved off something like 25%, so seeing some sort of a recovery kicking in. ICICI Bank follows suit, Adani Ports is in the green, Reliance Industries above the 900 mark, Asian Paints holds out by a good 2%, Axis Bank, L&T, UPL, HDFC Bank all ending with smart gains. Sun Pharma bucks the trend, it's a gash of about 2.6%. Tata Steel, Hindalco providing no respite from the metals arena, deters the case with Coal India. Yes Bank in the red, Z Entertainment as well as ONGC, which looks awfully listless. And that's where we shut shop and trade today, and it's fairly stock specific for the broader end of the market, Aisha, but notable that they did trace quite a bit of a recovery by the time we shut shop.
Oh yeah, absolutely. You've got a good market breadth after a gap of I don't know how many days. You've got a Reliance Infra which is held up by about 4%. Federal Bank has made a dash of about 4%. There's Amara Raja Batteries which has also seen a fair amount of OI build up, almost 21%. That's as well held out. There's the Adani Ports which has been so beaten down that also sees some OI addition today of about 17%, and that's also seen some covering coming in today. On the flip side though, it continues to be bleak for some of the sugar names. So Balrampur Chini loses another 8% today. This BEML, after that spike that came on the day that the government announced or gave the in-principle nod for the 26% investment. Post that, you've seen the stock slump. It slumps another 4.5% today. Adani Power is still down. Is REC which is down. And IDBI sees some profit taking. It's down about 6.7% after a heady move that the stock has seen year to date. Siddharth, what stocks are you picking up?
Well, I want to discuss about three stocks, and all three large caps, Aisha, ICICI Bank and SBI. Now, today morning we pointed out that how ICICI and SBI are underperforming and contributing towards Bank Nifty loss, and there is good amount of short positions which are getting built up. Now, today these two stocks have done really well and contributed towards Bank Nifty gain. So I was just seeing whether there is rise in open interest or if there is reduction, and there is no significant rise in open interest, which means that this is short covering rally. Generally, in a falling trend, if you see a rally which is led by short covering, that rally doesn't sustain. That's the interpretation out of data. So I'm not saying this rally won't sustain, but that's what statistics generally tend to do. Reliance. Now Reliance has not seen any formation of short position when it was coming down, and neither, in today's bounce back we are seeing any meaningful rise in open interest. So this 3-4 large caps stocks which have seen, we haven't seen any formation of long position. That's observation one. And the last observation I want to say is about advance decline ratio. You are seeing more declines than advances when Nifty is up by 80 points, clearly stating that this market was driven mainly by few large cap stocks which have done really well. And despite such a strong market or strong gains, 0.8% is no mean feat for a index which is at a base of 10,200. And if you don't have good market breadth, then I don't know how to read this. Maybe this is just a bounce and probably the trend would again start on the downside. That's what data and the action points are recommending or stating at this point of time.